Morning, everyone.
Good morning.
I'm Alice. I'm the founder of Optimone. Optimone helps lenders provide competitive cost financing to small, mid-size clients. Also helps them provide customized financing versus off-the-shelf lending. So these are the current problems. Off-the-shelf lending products. Our platforms helps the lenders in providing custom lending solutions. I'm going to jump to this slide. This is a case study that we did of a client on our platform. The red line that you see, it shows the off-the-shelf lending products can lead to stress to a borrower, versus the blue line shows you the customized financing, tailored financing solutions help the borrowers run a sustainable business. Also, the current model of financing is a reactive model. The application processes are redundant, whereas our platform provides access to capital in less than 7 days, leveraging decision intelligence and data analytics. This is a case study of one of the clients on our platform. You can see we've built a proprietary credit model to analyze the credit rating of small, mid-sized companies. Also, any future cash flow gaps that come up for the next 12 months, a bank or a non-bank lender can proactively understand the gaps, upcoming gaps of their corporate clients without the need of actually a company filing an application and act and help their clients to proactively manage their cash flow. Another challenge is rejections. When you apply for a business loan, you may hear after several weeks or sometimes months, or may not hear at all from your banker, and the application has been rejected. What our platform does is, the platform helps the borrower understand their credit rating and helps them improve their credit rating. So you may not be able to access financing today, but you can get to that path. One of the key areas that we focus on is making sure we're able to reduce the risk premium between large corporations and small, mid-sized companies. How do we do that? By making sure that we constantly help them improve and monitor their credit rating. It also helps reduce the cost of underwriting and application processing for the banks, and the banks can pass on these benefits to their customers, the cost savings to their customers. So via our platform, we financed $7.5 million US. This has been in alternative lending. We have there on the right, you see we've tied up with 3 institutional funds with a combined AUM of $1 billion to provide access to alternative finance. So our focus is helping banks keeping the costs low. Unlike large technology vendors, we do not ask for multi-million-dollar checks. I believe capital does not drive innovation. People, startups who care about solving a problem, they're the ones who drive innovation. And our solution is low-cost innovation that helps small banks, mid-sized banks, level the playing field for those banks, and they can help their clients in reducing the cost of capital. It's a model that's ROI positive from day one because it's a subscription-based model. We earn from the savings that we generate for a bank. versus the traditional, conventional technology vendor model wherein you sign up for building a technology solution upfront. I will quickly come to why we started building this. I've spent over 12 years in helping small, mid-sized companies in refinancing and restructuring. So post the financial crisis over a decade ago, I deeply cared about how do we make sure that companies do not come under stress. They remain liquid, they remain solvent. And that's the reason we started building the platform out 2 years and 9 months ago. I started my career with Deutsche Bank before the financial crisis. This is a quick timeline. We collaborated with Deutsche Bank in 2016, helped them build out their APIs, collaborated with the ecosystem with Startup Bootcamp, fund partners, over $1 billion in AUM. We are part of the Startup Academy, and I covered the POC quickly. We are focused on ecosystem collaboration and partnerships, and we're looking to partner with small, mid-sized banks, 5 to 50 billion. Thank you.
Yeah.
Okay.
Do you want to go?
No, go ahead.
Oh, sorry. Yeah, I'm just on left or right.
Go for it.
Yeah. So for the 5-minute format, you got to cut the content in half easily. You just didn't get there. So one way to potentially do that would be I would get to what it is a lot sooner. I would open up with that. Like, we have built the first small to medium-sized credit underwriting algorithm. Just say it. Like, you kind of were saying it, you're kind of there, but it's something like that. Sure. We built that. Okay, cool. So now you built something. I can now understand like where we're going for the rest of the pitch. The rest of the pitch should just be about, we have this algorithm. It helps underwrite or smooth out cash flow projection risk around credit underwriting processes at small to mid-size, or whatever the focus is. So yeah, I would kind of start over and just try to cut the content in half and get a lot tighter on what it is. The stuff around like who you are, where you came from, why you're doing this, I like that. I mean, you could start with that up front too. Start with the story in the background, or just start with nailing what you've built and then explain your story and how you got to why this algorithm exists and why you're doing it. So I get what you're doing. I understand the problem. It just was a little bit abstracted and just it stayed at an abstracted level. It's just gonna be hard for me to want to convert from the 5-minute pitch to the 2-hour sit down, right? Where I'm like, okay, I'm gonna devote 2 hours of my time to meet with the team to see if we want to look at this deal. And there's one more point. Get more when you kind of rewrite the thing. Get tighter on like what the real borrow and lender problems are. Like you were there, but you weren't like nailing the true issue. It's like two problems. Here's what most small to mid-sized businesses. Here's the problem they have. Right? Inefficient, bad dialogue with the bank or whatever it is. Just almost like get the quotes if you had like a customer slide, or alternatively. Here's why lenders are frustrated. I guess most lenders would probably say, sure, I have that problem, but like I'm just concerned that if we asked 10 small to medium-sized bankers in the Southeast in the United States, like would they identify with this problem? They might, but like you need to solve that in my mind, right? You need to tell me that you've gone to the market and the product market fit isn't an abstracted concept. It's like it actually exists. Because my bias would be most small to mid-sized bankers and lenders are kind of okay with the system, and they're kind of more of an inertia. There's more of an inertia problem here than there is an innovation problem, right? So anyway.
So that's why we highlight on the cost reduction, because for banks the incentive is if you're able to reduce their underwriting and operational costs, that's when, and that increases their profitability. Also with the same bandwidth, they're able to underwrite more loans, then your top line is increasing, your operational cost is decreasing, and profitability is rising. So that's my pitch to the bank.
Yeah, so you just kind of explained it. There it is. Yep. Just get tight and get it up front. Good job. Anyway, sorry, go ahead.
Yeah, and I think, Alice, you have the customers already. I mean, you've already funded $7.5 million, so I think that's great. you know so much, you're so smart, you have to dumb it down for us. And make it very simple. So I would suggest even getting together with a couple of folks who don't understand the industry as well as you do, and explain it. Take 2 hours to explain it, and then understand their feedback. Like how can you explain it, and just have them explain it back to you, and they will probably explain it back to you the way that you need to pitch it for everybody else. So I think that you have it all there. It just has to get narrowed down. A little bit more again, the team wanted to hear that sooner, and then you did a great job of telling us what you do, though it needs to be shortened. But how does your tool do it? I want to know a little bit more about that. Is it the algorithm, machine learning? Is it your team that brings some expertise? What is it about that tool that's going to make it the solution for lenders? And is it lenders really? Is it lenders that have a problem that's being solved? Is it the business owners? I'm a little bit, you say it's lenders, but I almost think the problem is really on the business side.
That's true. So every solution currently in the market is a lending automation solution.
Right.
So what we've been trying to do is try to solve the problem for the small mid-sized companies, but we need to bring the ecosystem on board. So that alignment has to happen, which we need to drive.
Right, but that's where I'm still a little bit, if your businesses are the ones who really are feeling the pain point, and a little bit to Mark's point that, do the banks know they have a problem? Do they want to change? It may really be the small businesses that feel the pain point that are willing to buy into your subscription base, or pay a service fee or something for that. And then you didn't quite have enough time, but the ask, what do you need from whoever you're pitching to? So, sure.
So I'll reinforce a couple of points here. So one, the team, again, and in particularly in your case, right? It really helps us understand where you're coming from, right? You saw a problem when you were working at a large financial institution, and there were a lot of unhappy customers, right? Potential borrowers that were being turned away. So that you use that story to really nail down, here's the problem we're solving. I really did like you did the problem solution piece up front. I did like that a lot, by the way. But again, if you use the team piece to kind of get us hooked and focused, and said, I did this at one of the largest banks in the world, and there's a problem here, we've identified it, we've now got this team that's going to be focused, and here are the problem sets that we're focused on. Sure. You went into that chart, right? And I have to tell you, I have no idea what your chart was about, because I was looking and I don't think the axes were labeled. So I had to impute that it somehow reduced costs, but I had no idea why. So the story around that chart needs to get a little bit.
Was that loan performance? Was that like loan book performance, or what was that?
So that's actually typically what happens is if you're not borrowing. If you're doing excess borrowing or over a non-customized borrowing, then that is a negative cash flow.
Is that my loan portfolio?
You get your fees up front.
That's cash.
Yeah,
got it.
You're going to a negative trajectory.
Yeah.
And if you're doing customized borrowing, then you're staying positive.
Yes.
So a lot of stress that happens in the industry happens because of just bad, off-the-shelf, one-size-fits-all.
So there's the lender
products.
problem, like that's the lender problem. If you could explain that slide through the lender's view without abstracting it.
Yep.
Like when I say abstracted, it's like
Yep.
3 people sat here and were like, they have no idea what you're talking about.
So the other piece of this, and I still have a core fundamental question about how you're positioning your business, right? So are you really the lending decisioning platform, or are you actually a lending marketplace? Like a lending tree here in town, right? But for small business, and I'm not really sure.
We are. The goal is to combine both, because the platform, unlike we have the platform access for the lenders, and this dashboard. If you see this, the borrowers have access to this.
Sure.
So unlike other lending platforms wherein the borrower does not really have access to their information in terms of what's going on.
Yeah.
We've built it from a borrower out perspective.
And marketplace models are wonderful. They're also really, really hard because you have a chicken and egg problem, right?
Yep.
And the chicken and egg problem is very simple. How in the world do you get borrowers, lenders onto the platform and lenders at the same time?
Very
now,
good point.
and again, if you tell it in that, I'm sorry, I'm an economist by training, so when I get really going on marketplaces, they're wonderful if you can pull it off, right? But again, and you've done some of this, right? You told the story. Hey, we got some alternative lenders who were willing to get on the platform, and we actually had 7.5 million in throughput. So we understand that market. They wanted access to some small business lenders, but again, if this was an investor pitch, one of the things you got to tell me about that acquisition strategy of both the lenders and the borrowers, right? Because typically on a marketplace model, that's the real key. What does it cost you to actually get a borrower onto the platform, right? So if you're going to pitch it as a marketplace model, you really need to get focused and address those two pieces.
Sure.
And that's all we got time for. Alice with Optimone.